Afternoon, guys. Today we'll be looking at some of the most important things when you're looking at the ICT mentorship, which is, for me, I think this is the most important thing. It's the PD array. Here, this specific series, I wanted to look at the PD array and what are they, why do we use them, when do we use them, where do you use them, who uses them. So it's basically the 5 W's and 1 H, right? So basically I want us to go through this and do it together. So this video might be one, or it may be broken up in like parts depending on how long this one is. The reason why I did this because PD arrays are so important, right? So let's get into them. What are they? They are premium and discount arrays, right? So we'll complete this PD PowerPoint presentation together, right? As I'm going through it, we'll be finishing it. So if anyone wants to get it, I don't know, I'll make it available for download, or you guys can just screenshot it as you go. I don't know, but we'll figure it out. What are they? Well, they are premium and discount arrays, right? Plus, I will simplify these things as much as I can, right? So, and how I understand them. They are also liquidity points, right? They are liquidity points. What does this mean? Where stop losses reside. Alright? No, that's not how you spell stop losses, whatever. Yeah, liquidity points where stop losses reside. Alright? Where do stop losses reside? Where if right now we decide to take a trade, right? Let's go, let's open XM. Let's go. Let's say right now we decide to enter a trade. Okay. Any chart, not a lot of lines in it. Let's say we enter a trade, sell here, or here, or here, or anyway. Let's say we sold on this chart. Where would we most likely put our stop losses? Here, above this high, above this high, above this high, above this high. What's common? The highs, right? So if you're selling, what's common? The highs. What's gonna be above that? Stop losses. It's obvious, right? It's the only place anyone can logically put stop losses at, right? And even me, even you. So now what happens is we call these points liquidity zones. This is where price will draw to take out all this liquidity. Why? Because we're assuming that there are stop losses residing here. We're not assuming it's the only place you can put stop losses. What usually happens, all these points get taken out, just as you see on the right. So this is what PD arrays are also. All right, they are liquidity spots, because so and I can't show you how to draw them yet because that's on how. So you'll just have to bear with me and go, and even if you don't understand, but you'll just have to go with it and to understand this as soon as the whole video ends, you know. So we can write that down. So places where stop losses reside, right? That's what they are. What else? Entry points. That's what they are, because we'll also use these PD arrays to enter, right? Where there's a PD array, that's where you'll also use to enter. What else? They are exit points. You'll also use liquidity points to exit, right? Just like this one. If we knew that those stop losses residing here and then we took a buy somewhere here, all right, using the ICT methods, when we have our stop losses down here, that's soon to be taken out in the future. I don't know when. That's not a trade, I'm just saying. Let's say we took a buy here, right? So where we would exit, which is, let's say anywhere here, anywhere from here or here, you can almost bet that there's a opposing array right here. So if I go in here within this discount array, right, I can bet you right now that there's an opposing premium array here. Why? Framing what? Our exit. If you don't believe me, we can go through it. right here at this point, somewhere here, I know for a fact there's a premium array. Okay, let's go. This is, you don't have to learn, as you don't have to care about what I'm drawing right now. I'll show you how I do it, but for now I just want to prove to you that there's actually an array at the point that I'm saying there's an array at. Exactly, you see, like how accurate it is there. So you'll also use it as your exit points. There are various reasons as how you'll frame it and whatnot, but I'm just trying to show you why arrays are important, why you have to mark out these zones, and why they are your bread and butter to your everyday trading. You can't live without them. Yes, there's a lot of other things, market structure, power of three, a lot of things that you need to take into consideration, risk management. There's a lot, but I want to focus on PD arrays for now, because that's the one game changer that you have to focus on, right? So after PD arrays, what are the entry points, exit points, liquidity points where stop losses reside, right? Premium discount arrays. Okay, now let's add another slide to this. All right, no, sorry, let's add another slide. Delete slide. So we answered what are they. Now we know that PD arrays, right? What are they? They are premium and discount arrays. They are where liquidity points reside, which is where stop losses reside. They are our entry point, they are our exit points. Okay, now we know what these things are. Now what's next? Why do we use them? Why? Let's go. Why do we use them? I'm sure I'm gonna break this video in half. There's no way. I can already feel that it's been going on for too long, so I will not finish it. Just a disclaimer, a heads up. Yeah, I'll break it into 2 videos. I'll upload one today, then I'll finish the second part today, but I'll upload it tomorrow. Yeah, so that there's not much of a time difference in between. So why do we use them? We use them, get me right, we use them to determine, right, our entry and exit points, plus where stop losses are. The why is very simple because it's tied up. It's literally tied up to what are they, right? So your why is a strong influence or confluence to what are they, right? So that's the first obvious answer, is we use them to determine our entry and exit points, plus what SLs or stop losses are, right? This is why I use them. I don't know why anyone else would use them, but this is why I use them. Anyway, we'll get to the how. When do we use them? When do we use them? When do we use them? We use them between London session or New York session. I like the New York session. I only trade the New York session, by the way, just a disclaimer. So we use them New York session and London session. I use it at NY session open up until I usually look for a trade from 8 up until midday. Let's say up until 3 p.m. Just when I look for a trade, alright? And until then, like after 3 p.m, what I mean is that I don't look for a trade. That's when I'll use them. From 8 a.m. for whoever doesn't know when the NY open is. New York session, 8 a.m. NY time. Make sure. I am not in NY right now, but I have to know that the time is 8 a.m. NY. when it's 8 a.m. in NY. For me, it's actually 2:30. So yeah, fun fact. London session or NY session, this is where we use them, right? So I'm not teaching you everything about the ICTs. Remember, this is specific to PD arrays. If I teach you ICT, that would be too long, and ICT already has his own mentorship that he teaches. So I would advise you to go there and learn it. So that, but this is just a simplified version of what you'll learn there. So it's not a remedy to everything. Like, this is just a more simplified, if you've been reading and been battling with it and not being able to disintegrate them, and what this means, and what this should bring clarity to PD arrays, why you use them, when you use them, how, why, when, what. This is your all, right? And PD arrays for me are the most important thing. So this is why this video is so crucial and so important. It's probably the most important video that you will ever watch on YouTube, besides ICT's actual videos, because this actually focuses on juice, on what is important, which is what matters. Number 4, where do we use them? Where? Okay, where is gonna be, where do we use them? Right? Firstly, on any chart, right? I mainly use it on the US dollar index, the 30-year bonds, right? 10-year bonds, 5-year bonds, right? And I use it on the S&P, on the S&P 500, and US 100. Yes, this is where I use them on any chart. I specifically use them on these charts and my Forex pairs, Forex major pairs. I trade one pair, by the way, only, but I do analysis on these, all these. I look at them. I look at all these charts. I draw PD arrays on all of them. I know where they're going and where they come from, right? In terms of PD arrays, I do that all for one pair. Which pair is that? The Euro USD. I only trade the Euro USD, but I use all this data from all these charts just to make a trade on that one chart every week, right? So that's what I do. All right. Yeah. So where I also want to be specific on, okay, where this was also a bit on the how. We will draw them. It's below. It's not below. It's actually at lows and at highs. This is just giving you a brief, since you asked where would you find these things. So I just feel like I have to answer every where part of the question that I can, or anyone would actually ask themselves. So at lows and at highs, all right? Or really in between, actually, or in between price points, like you literally use them anywhere in reality. But you'll see why I specified at lows, at highs when we get to the how and how we draw them. Who uses them? Me and you. Okay, well, who? Well, it's not that simple. Okay. Who uses them? Who uses them? Me and you as traders, right? But who else do you think uses them? Who else? It's whoever is in charge of the price delivery system, because they seemingly trade off these price points, right? So they trade from one price point to another price point to another price point, one from a discount to a premium to a premium to a discount to a discount to premium, right? So it's not just us that is using this. This is why I think ICT's method is so effective. Like it's really, if you haven't done yourself the favor of going through that mentorship, please just stop this video and go there right now. All right, so it's whoever is in charge of price delivery, right? Now this, I think, yeah, this is just going to be one video. And now on the how do we use them, right? How, this is where I just show you now how to draw them. Let me say we use them. I've been saying we, right? Yeah, I've been saying we. Yeah. Okay. How do we use them? Let's look at the charts for this one. More especially at examples, because these are drawings, okay? So let us go to the charts. This is how you would simply draw a premium or a discount rate, right? So let's take Euro USD. The red are premium, blue or green is discount. Okay, let's do this. How would we draw PD arrays from this point to this point? I just picked any random place, which I think is the best thing you could ever do for a trader, because that's literally what we have to do always. We can't know where, yeah, anyway, whatever. So it's an uptrend. We see that it's an uptrend, right? We're looking for premium or discount arrays. So since it's an uptrend, we'll focus on discounts. If it was a downtrend, we'd focus on premiums. But for the sake of learning on the how, we'll draw both discount, and I'll show you both premium, because I can still draw I can still show you premium arrays on an up market, an uptrend, right? So this right here, oh no, what are you doing, computer? Okay, let me drag it a bit more. Here on the last green candle before price turns, yes, we always have the benefit of hindsight when we're drawing these things, and every time we analyze, right? So this is going to be the same for you as it is for me now. Just follow the exact same thing I do. So you look for the last green candle in an uptrend, right? After the reversal or this retracement, we look for the last one, and then we draw a line, just a line. That's it. Above, not above, you draw just a line here on the open, and then you draw another line on the close. ICT recommends you draw lines on the open, close, high and low, plus an equilibrium point. Those are your 5 points for one candle. Those are your 5 premium points for one candle. So you have to know these things. That's why I'm saying you have to watch this video. So this is gonna be our premium point, right? This is gonna be our premium array, right? Now where would our discount array? The same thing, but on the opposite end. Where is the last red candle on this downside before the upside movement? Here it is. Where is it open? Where is it closed? Here is it open, there is it closed. Remember the rules, you put it on 5 places, but as you will too, as the more you get experience, you'll learn to put 1 or 2, because there will just be too many lines, right? You'll learn based on what works for you best, I guess. Yeah, right? Open and close. The reason why I put only 2, if I could explain, is that if I put another one here, for me it just seems prices, the high here is just too close, right? This is too close for me to actually add another line here. I would just stick with the open, right? And same reason here on the same thing. So but now let's say I had a long wick that stretched up to here, then I'd probably put indicate the lows, put another premium array for the lows. So this, folks, is simply how we draw these things. It's simple, right? So this is it. This is how you draw them. Now this is not complete. This is not the complete strategy. This is just PD arrays, just PD arrays, simple PD arrays, your bread and butter, where liquidity stretches up to, just like here, and retraces back into a discount array. Right here, there's a fair value here. Let me show you this trade, how you and me would have read it if you understand ICT concepts. There's fair value here, you know, right here, fair value gap, fills it, right? It filled it. This is a discount array. And then it went up again. It respected the trend, what this discount array that is trading away from. What stopped it here? What do you think? What could your reasoning have been for it retracing after it reached here? Why do you think it turned back? There were stop losses above here. What did it reach into? Stop losses, right? And then after that, what did it do? It can't continue. Obviously, there are stop loss. If we were buying, okay, took out the sellers right here. Now, if we were buying, if we bought in this trade, if we were smart enough to enter here, let's say we were, right, and then prices here right now just took out the sell side liquidity on top here on these highs, right? It took it all out. Where do you think the next buy side liquidity is? Let's say we entered anywhere here from the bottom, right? Anywhere here. No matter how smart you think we are, anyway, where would we have put, let's say, that our stop loss right now? And remember, this is a monthly chart. Where would we have put our stop loss? Most traders trail. They do something called trailing their stop loss. So they'll move their stops from here. Then as it goes higher, they'll move it high to their entries. Then they'll move it above their entry. So most likely, sometimes price doesn't even have to go down up to grab stops here, because most likely a lot of stops are already here in between. So in order for price to balance again, all it needs to reach up to this liquidity point and then goes along its way again. So, but that's just that. But that's very that's more of the technical side. Those are the concepts that I'm saying. Okay, go to ICT mentorship and go learn. Right? That's deep PD array talk. Okay, so but now on just scratch the surface. Just what are PD arrays? Why do we use them? Who uses them? You know, when do we use them? Why do we use them? You know, what are they? You know, and then after we learn these, then we expand on them. We expand on them until we know what we're doing. You know, and so till next time, guys. I'm glad this doesn't have to be a two-part video. I've been saying it's gonna be a two-part, but luckily we could just made it one anyway. Bye. See you next time. I'll upload a video every day. By the way, I'll look for something to always teach within the model. And then I'll pick for something specific and I'll add on it. But right now I still want to focus on PD arrays more. So if I think of another video for PD arrays, I'll be sure to make another one. So just look out, like, subscribe, and yeah, thanks guys.